The cost of auto insurance this year is going to go up. Hey, this is Jimmy Goodwin with TWFG Insurance, and I've got a little bad news for you. The cost of auto insurance this year is going to go up. Yep, it's going to go up, and it's probably not going to come down this year. And I've been hearing from my customers and also other people, they're not very happy with paying higher cost of insurance. And to be honest, nobody is happy with that. But there are reasons for the insurance rates going up, and they're not arbitrary, and they're not just because the insurance companies are trying to screw you. So I wanted to go over just the top few so that it can help you understand a little better why this is happening. And I don't think any of these reasons are going to shock anybody, but maybe you haven't associated these reasons with the cost of your auto insurance. Number one, inflation. Yep, inflation is about 7%, which means that the overall cost of everything has gone up about 7%. But within those particular numbers, things that more aggressively affect the auto insurance companies have gone up significantly higher. The cost of vehicles are up quite a bit. The cost of new and used cars and trucks up 11.8%. And more importantly, the cost of used vehicles are up over 30%. Now you may ask, what does that mean for me? Well, what it means is that if an insurance company has to pay for a car that's totaled, they're going to pay more than 30% more than they did a year ago. So if they paid off a car last year that was $20,000, they got to pay $26,000 this year. Also, the cost of healthcare has gone up about 8%. And remember, in your auto policy, there's that bodily injury part where the insurance company pays if somebody is injured. The cost has gone up for that about 8%, and the long-term severity of those injuries has gone up because people are having to delay getting care because they just can't get in. Secondly, supply chain interruptions. Everybody's seen in the news the ships that are sitting off the coast of California, parts aren't coming in. They even talked about Christmas being canceled because the supply chain was having problems. This creates a shortage of parts. And when there's a shortage of parts, price goes up. And when the price goes up, the insurance companies have to pay more. So you have car parts are going up in price, along with the cost for total vehicles going up in price, along with the cost of healthcare going up in price. And that all goes in how much it costs for a claim with the insurance companies. The next thing we want to talk about is labor shortages. Everybody's heard it. Everybody's heard that people can't find employees, right? And so there's a shortage of labor. When there's a shortage of labor, the cost of labor goes up. Employers are having to pay their employees more just to keep them from leaving. So what might have cost $100 to have a technician replace a bumper, it's going to cost $130 now for that same technician to replace the bumper. So what you have is the increase in labor on top of the increase in parts, on top of the increase of healthcare, on top of the increase in used car prices. That all goes into the claims dollars for the insurance companies. Finally, you remember back in the pandemic when the insurance companies were sending out those rebate checks, those refund checks? They weren't doing it just to be nice. They were doing it because people weren't driving. People were staying home. There weren't a lot of cars on the road. Didn't have many accidents. Well, now, 2022, people are driving, and they're driving more than they have in the last 10 years. When you put more cars on the road, you have more accidents. And so what happens is you have more accidents, you need the body shops more, you have cars sitting at the body shops for weeks waiting on parts that are more expensive. So you have a greater demand for body shops that are having to pay more for the parts, that are having to pay more for the labor, and you have the insurance companies that are having to pay more for totaled vehicles and having to pay more for medical bills for people that are injured. And that just leads to just a crisis in how much the insurance companies are having to pay out. They're having to pay out a bunch more, and they just can't carry those losses forever. If they carried those losses forever, they would go out of business. So what can you do about it? I told you we were going to talk about what we can do about it. Well, you can't change the insurance companies' minds about raising rates. They have to still make a profit. But what you can do is you can shop your insurance around. There's a lot of insurance companies out there that are A-rated. Some you've heard of, some you haven't heard of. We're contracted with like 15 of them, and we can shop your insurance amongst all of them. And what you'll find is that not every insurance company is going to be the same price for everybody. Not every insurance company is going to raise rates the same. And most of the time, when a person lets us shop their insurance, we're able to give them a better rate. So my suspicion is this, is that if you let us shop your insurance, we're going to get you a better rate than what you're paying now, much less what you're going to be paying in 6 months when you get that rate increase. So let us take a look at it. We're happy to help you, and have a good day.